Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tom Ernst, Chief Financial Officer of Symbotic. We also have Bill Boyd, Chief Strategy Officer with Symbotic, which seeks to modernize the supply chain and reimagine warehouses. It's great to have you both with us. And Bill, I'll start with you. Give us an overview of what Symbotic does and the solutions that you provide.
Thanks, Jill. Thank you very much for having us. You're exactly right. We are aimed at producing a technology platform to revolutionize the supply chain between manufacturers and end consumers, whether they purchase goods through brick and mortar retail or through e-commerce. And we've been investing in this. We've been at it for about a decade and spent about $600 million investing at the nexus between autonomous vehicle technology and AI-enhanced software. And we think we've created what can really be the backbone of that part of the supply chain for the future. And since we've been doing this with fantastic customers like Walmart, Albertsons, and C&S, we've been able to prove our use tests in live distribution centers and have created a backlog of over $5 billion of orders that we're currently working to fulfill.
And Bill, we've heard so much over the past couple of years how the supply chain is broken. Where is the disconnect?
Well, it's a number of places. There's no question the supply chain is indeed broken. But for us, what we have been working on throughout this time is aiming at the critical components of supply chain around speed, ease, variety of product to get to customers, and addressing these all in these multiple channels. And since we've been able to do it by bringing together what we call smart hardware and smart software, using machine learning and artificial intelligence to solve the problem in a very different way than's been done before. We've been able to take what has been a very archaic supply chain over the last multiple decades and turn it into a supply chain that, using existing real estate, can actually service customers much more efficiently and much better.
And Tom, Symbotic's founder and CEO self-funded the company. What will happen once the company goes public? And what has Rick's impact been to the grocery wholesaler industry?
Yes, that's right, Jill. Our founder CEO, Rick Cohen, did bootstrap this business, effectively funding all of that over $600 million that Bill mentioned. The genesis for the vision for the company really started with Rick, and it started with his prior business, his family business. Rick joined his family business and took it over within 10 years back in the 1980s and grew what was a small wholesale grocer business, a $50 million business, into the market leader with over $20 billion of revenue. He did so on the back of automating manual processes with software. That's where he got the vision for the next wave of innovation in the supply chain is around robotics, and specifically around autonomous vehicles and artificial intelligence. So that was the genesis that Rick brought to this company. It was that inspired idea that led to what Bill mentioned, and that's our 10-year history and our $5 billion backlog. So Rick is deeply engaged with the business today. He's our CEO, and he's the hardest working employee we have. And he's, post the SPAC transaction, he'll still retain over 70% ownership because of that, the fact that he did drive all the investment to date.
And Tom, let's talk more about that. Why is now the time to go public, and why access the public markets via SPAC?
Yeah, we're extremely excited about our SPAC opportunity. The reason why it's right for us is this enables us to take that next step up and be ready to scale the business. And importantly, it does it in scale and size and allows us to go to market with key partners. So between our partners, SoftBank and the warrantless SPAC, the best-in-class structure we have, and Walmart, they're both directly participating to contribute $350 million in capital through the PIPE process. And then we end up out in the public markets ready to invest in recruiting and retain the right talent, recruiting and retaining the right supply chain to really scale the operations to achieve our over 80% growth we're looking forward to over the next few years.
And finally, as a public company, as we look longer term, how do you plan to grow?
Yeah, so growth, we have multiple legs for growth, and we're excited about those. So it starts with those anchor customers that Bill mentioned, Walmart, Albertsons, and C&S wholesale grocers. They've given us firm committed orders with scheduled dates for over $5 billion in systems. So our plan is to roll those systems out. Those customers as well are already asking us about new technologies and new sites as well. So we'll do some of that as a next leg of growth. We're talking to new customers as well, so we're going to look to add some verticals, look to add some geographies. Today we're North America only. And then finally, our business model itself just lends itself to upselling incremental capability. So the modular nature of our system enables us to upsell new capabilities for sites in place seamlessly, including just upcharging for increased throughput of the system.
All right, Bill and Tom, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.